Hello and welcome to another update video about Ethereum. Yeah, on Ethereum's chart, there is not much to report, but the price channel is still being respected. So it seems like we're getting a well-defined price channel there, potentially, okay. Especially because the yellow wave count suggests that we could be moving in a diagonal pattern to the upside, a leading diagonal after a wave 2 low that formed here on the 23rd of January. It is quite important to have potential trend lines. They are still subject to change. It's not a very well-defined price channel, but what is important is to connect waves 1, the wave 1 top, yeah, and the potential wave 3 top together, and then we get a bit of a parallel trend channel there. I need to refine that a little bit, but broadly, and then we can add that to the low of the wave 2. And yeah, you might cut through a few price points here, but that's okay for an Elliott Wave channel because it gives us an idea of where the wave 4 might end. It's not super reliable, but another data point, okay? Just something else to watch. And as long as we are within the price channel and don't even break below Fibonacci support, I'm going to give the yellow scenario or further upside the benefit of the doubt, which means I'm leaning bullish, okay? That's consistent with the message from previous videos. The market obviously pushed a little higher. It's now reached the minimum expectation for that circle wave 3. That was not the case in the last video. I don't know what happened actually. I thought it was further away, but it basically, if you watch the previous videos, you will remember that the minimum target for this third wave here is obviously the 1.236 extension as always, especially in the diagonal. I want that minimally reached. Better would be a little higher, but that was not reached, or yeah, you know, wasn't reached until yesterday. Overnight, the target was reached. That doesn't mean, oh great, the analysis works. Well, at least we know that the chart is respecting the fib levels, and at least it keeps the yellow wave count relevant. I think that's the main takeaway here. It keeps the yellow wave count relevant, and better would be even if the third wave would stretch a little higher to around about 2,570, because this is the 1.38 extension and gives us an even more reliable third wave. Yeah. I would then have to adjust the fourth wave support a little bit, and then we can look for a fifth wave that would ideally reach the 1.618 extension or more at around 2,630. So I'm leaning bullish against the lower boundary line of the trend channel. So if we get a deeper pullback, I will use that trend channel for support. And also the Fibonacci support levels down there. It is already a sign of weakness. If the market breaks to the downside of the price channel, yeah, that would be a sign of weakness. So ideally, we don't even do that. But if it happens, then $2,350 is the main support. I will have to adjust that with the price as it climbs higher in the yellow count. The only way to distinguish between the short-term bearish count, which is white, it's a B-wave top, same potential exists on the Bitcoin chart, which might lead to another low, and the yellow count, which will give us a bullish setup. The only way to distinguish it is between well, do we hold support or not? So even in the white count, we can go further, and I keep it very simple. Against support, I'm watching for higher prices, and in the yellow count, we should get one more high. All right, so still watching for one more high here in the yellow count. It would be ideal, and I'm going to give it the benefit of the doubt against the support zone, which is clearly defined. Below 2,350, this is our signal that probably the white wave count is playing out, and that in the white wave count, we're going to see another low to around 2018 or even $1,911. Yeah, that would allow for another low and would just mean that the wave 2 is still unfolding, and that it unfolded not as a, well, yes, as a WXY structure as already shown here, but the Y wave didn't end here, it ends down here. And that's a risk that's still there. You need to be aware of that, but it basically gives us also, I think, peace of mind, because it means that, yeah, even if we break below micro support, I mean, what does it mean? It means that we're just falling back into an accumulation range and we're still in an overall bullish scenario. So it would just mean a deeper pullback in a bullish market. I think that's pretty good. But for now, I think we might be going already, you know, but I need 5 waves. I need the 5 waves. As soon as we get 5 waves, if a 5-wave pattern appears, okay, I'm not telling you it will appear. I'm watching for it, okay, and I'm lean, you know, the analysis allows us to understand what needs to happen to understand something as a 5-wave move. And those 5 waves, as soon as they appear, they will give us a new higher support area or a different support area that could be a jump off point, a breakout setup for a third wave rally then. Because these initial 5 waves, again, it would be a wave 1 leading diagonal, then a 3-wave pullback, which will correct the entire move here. We call that an ABC correction. It would be a wave 2. I can give you another support zone, and then the third wave should really take us way higher. So it's the main benefit of tracking the waves, the structures, not to predict this will happen, but to get the next setup onto the chart. And it will only appear if we get 5 waves. That's my update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.